And hello, everyone. Welcome to another power scanning session. It is June 20th, 2026. My name is Daniel, and I will be your host for this session, where once again we will be on the lookout for the most interesting swing trading setups for the week and the weeks ahead. I am greeting you today from our beautiful office here in Montreal. Yes, I'm back from my trip. I was in Germany and Cyprus for family and also some trading conference reasons. But I got back yesterday evening. Back to Montreal. It's a cold day here in Montreal, only 20 degrees centigrade, cloudy skies. Not the nicest day, but I heard there's some rain also on the horizon. But whatever, it is what it is. And of course, we're not here to discuss the weather. We are here to talk about trading. And before we get into all of this, where are you guys calling in from? Please put your location into the Q&A box. Let's see, who do we have in the room today? All right, so let me see. We have Linda from Orangeville, Ontario. Hey, Linda, how's it going? Nice to have you. Daryl is there. Hey, Daryl. I know it's 9 a.m. in San Francisco right now. He's hailing us from San Francisco. Fabian is saying hello from Hanover, Germany. 31 degrees centigrade in Hanover. Wow, that's definitely much hotter than it is here right now. David is there. Hey, David from Atlanta. How's the weather down there? Must be also nice and warm, I imagine. Oliver is saying hello from Singapore. And if I'm not mistaken, it should be midnight there right now. Hey, Oliver, thanks for staying up for the session. We really appreciate it. Who else do we have? We have Costas saying hello from Berlin. Hey, Costas, how are you? I was just near Berlin, actually also in Berlin, in Potsdam, which is just a little bit outside of Berlin, to visit my sister. She's been living there for quite some time, so it's a very nice area. All right, Donna saying hello from Virginia Beach. Hey, Donna, how are you? Nice to have you. And also, Horst is in the house today, saying hello from warm and sunny Munich. And Andrea's there as well. Hey, guys. And Oliver is saying, yes, it's midnight right now in Singapore. Oh, wow. Thanks, Oliver, once again for staying up so late. So late. And then we also have Devendra in the house today, hailing from Princeton, New Jersey. Well, thanks, guys, so much for sharing your location with us. Let's get started. And before we do, a quick reminder of what we actually be doing today. So we will be, as we always do, be on the lookout for the most interesting swing trades. So this is not about day trading. This is not about buy and hold investments. This is about swing trading. And swing trades typically, as a rule of thumb, have a duration between 1 and 20 weeks. The exact duration is not really important, but what is important when it comes to swing trades is that you should check up on your trades regularly. Ideally, once a day, you open up your portfolio, your investment account to check up on how your trade is doing, to see, hey, do I need to adjust the trade? Should I close out the trade? Perhaps should I add on to the trade? This is important when it comes to swing trading. All right. Now, what we will be doing today is what we coined the 13 minutes strategy. And the exact number of minutes, once again, it's not so important. It just sounds nice, like 13 minutes. What is important is that this is something you can do in just a matter of minutes. See, I talk a lot and I explain a lot, so this session will take about 1 hour. But if you are not talking all the time and you can focus on just the scanning process, this can be done in just a matter of minutes. And we encourage you to create a routine in your trading, in your daily routine, which incorporates using the dashboard to scan for interesting swing trading ideas. This may only take a few minutes, but every day, once you follow it, can be a day where you find your next very promising setup, which is tradable. So this is something we encourage you to do. So for example, here, this is my swing trading idea where, I predefine a set of criteria. This is just a one-time activity. Then before the market opens at 8 a.m. Eastern time, when I say the market, I mean the New York stock market. I know there's many Europeans here as well, but we're talking about the New York stock market. At 8 a.m., log into the dashboard. I run the scans. I find a hot list of symbols and come up with a trading plans for the symbols which look the most promising. And then when the market opens at 9:30 a.m. or perhaps a bit later, I will see how the market opened for these symbols under a consideration. And if I like it, I execute the trade. This has been my swing trading routine. And we encourage you to have something similar to find for yourself as well. All right. So real quick, for those of you who are joining us today for the very first time, we are tradingindicators.com. My name is Daniel, as mentioned before. I'm the guy here on the left-hand side, and together with Homa here in the middle, we have created trading indicators about 10 years ago. And about 7 years ago, Niklas here on the right-hand side has joined our team as well. He is one of our lead developers and has helped us with many of our latest innovations. Niklas is also in the room today, and he will be assisting me with any questions that you guys may have. So if you have any questions or symbol requests, please don't be shy. Put these into the Q&A box. The more the merrier. The more interactive the session will be, the more fun it will be for all of us. All right, a few more things. I do need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, now a couple of housekeeping items. First off, what we will be doing today is to interactively scan for setups using our great Liquidity View dashboard. Or scanner. It would be best if you followed along. So if you don't have access to our dashboard yet, you can sign up for a free trial right now. This will take just a minute. And once done, you will have access to the dashboard as well, and you can follow along our scanning process. The link to sign up for a free trial is down here. It's tradingindicators.com/view. Once you do, you have to put your personal information, your payment information, and once it's all done, you submit the info. You will not be charged for the first week, and you can cancel anytime, and you will get access instantaneously. And of course, in that you can check out the dashboard, see if you like it, see if you can make sense of it, see if it helps you in your trading process. If you don't like it, no harm, no foul. You can cancel. You won't be charged. But if you like it, of course, we have interesting monthly and yearly options as well. Talking about interesting special deals. As you know, we do have, or we had, I should say, a summer sale going on where you would get 40% discount on all our indicators and dashboards, including the Liquidity View dashboard. Now, this sale has officially expired, but for a short period of time, I talked with Homa beforehand, we will reopen it just for a few more hours in case you missed it, in case you took last week off, to allow you to take advantage of this 40% discount. The link is down here. It's tradingindicators.com/flash2026. Nicholas has also put this link into the chat box along with, I believe, the link to our dashboard as well. Perfect. Yeah. Thanks, Nicholas. And yeah, check it out. For those of you who are already owners of the dashboard, who are already using the dashboard, who already have a subscription to the dashboard, what you can do is you can sign up for a new subscription using the discount code, locking in this discount. What I will do is I will then manually merge these two subscriptions into just one, and also make sure that any unused days on your subscriptions will be added to your new subscription, if that makes sense. So if you have any questions, you can always also contact me and I'll explain a bit more in detail. All right, so moving on. We do have a Discord channel available at tradingindicators.com/Discord. In fact, that's the invite here. What we're trying to do with our Discord channel is to create a trading community where traders are helping other traders. We are also there. We're also, monitoring and posting information every once in a while. But the idea is that traders will help other traders. If you want to help us create and grow this Discord channel, sign up. It's completely free at tradingindicators.com/Discord and contribute. And lastly, we have an ebook called The Power of Three, which focuses on the three main setups that we are typically scanning for. Download is completely free here at tradingindicators.com/power-of-3. This link is also now available in your chat. Thanks, Nicholas, for doing this. And lastly, if you guys have any feedback or suggestions or ideas on how we can further improve our dashboard, please don't hold back. Your feedback is what drives the further development of our dashboard. We've got so many good ideas from our users. In fact, it has grown so much, such as with trade notes, with additional filters, new scans, dividend information, earnings information, multiple language support, edit or annotating your chart in full screen mode, and so forth and so forth. So all this comes directly from our users. So if you guys have any feedback at all, please don't be shy. Share this feedback with us, either in the session, put it into the Q&A box, or send us an email afterwards. All right, now, without further ado, let's get started. So we're going to start with our market review. What has happened in the last week in the markets? And of course, Friday was an exchange holiday, so the week only went from Monday till Thursday as far as the US markets are concerned. So I'm going to open up the dashboard right now. There we go. And before I will review or start with the SPY, let's have a quick look at Apple. Something that typically Apple is as the first charts I always open up, because Apple had something interesting, and this will become relevant later on today. So what do we see here on this Apple chart? And for those of you who've joined us before, you might already know this. So what do we see here? Well, Apple, first of all, is in a bullish trend. You can guess it from the price movements, but you can also check our MA Rush indicator, the one that prints these bullish and bearish labels onto your chart. You can see the last label on your chart is a bullish one, meaning the current trend right now is bullish. So Apple's bullish. So far, so good. Not a big surprise there. But what we also see here is that in May, beginning of May, prices broke this green line here. You can see this little green line here. This is a resistance level. In fact, let me quickly go to a different layout here. Just a second, which has these labels on it. By the way, guys, the ability to save your layout is something we recently added. And guess what? Based on a suggestion from you guys. So your feedback. Anyways, there we go. So Apple broke. Oops, let's go back to Apple's Palantir. Apple broke above a resistance level. You can see it here in the beginning of May. All right, this happens. So this level was broken and prices initially went up. But then they stalled out and corrected down. And where it gets interesting is where prices stop their correction. Exactly at this green line here. And for those of you who have joined us before, you know that this is our classic zone break retrace setup, or as Aubrey would call it, ZRBT. ZBRT, zone break retrace. Okay, whatever the abbreviation might be, this is what it is. So prices stalled out and stopped exactly at the broken resistance level, which at this point is acting as support. Oftentimes, a great opportunity to engage into this bullish trend at a lower price level after the correction has been done. So this is what happened to Apple. And we're going to see today, there are quite a few symbols out there which have exactly this setup right now. I'm going to try to take advantage of this. All right, so that was Apple, but let's go to the global markets. What's going on with the SPY, the ETF that tracks the S&P 500s? So what do we see here? A couple of things. First off, we had corrected down a little bit about 2 weeks ago. Nothing dramatic if I measure this out from the top here, from the peak down to the bottom here, just 5%. This is nothing. But of course, it's an ETF. ETFs are not as volatile as individual stocks. Now, we had this correction, and what's interesting here is that this correction registered as a level 3 pullback on our trend radar indicator. And if you know this indicator, you know that a level 3 pullback or a level 4 pullback are the pullbacks which we call or term healthy pullbacks. And a healthy pullback in our book is a pullback which is not too small, like really small pullbacks like this one here is maybe not so meaningful, and not too big so that a complete trend reversal may happen. So a healthy pullback is right in the sweet spot. This is what we saw about 2 weeks ago. And this, you can see it here, almost immediately afterwards, this pullback was bought up and prices came back up again. So prices went up. They didn't reach the all-time highs, But then on Wednesday last week, look what happened again. Another level 3 pullback. And once again, this could have been an interesting opportunity to potentially engage into this bullish trend in the SPY at a cheaper price level. And now we're trading still in the vicinity. The pullback is gone as per our trend radar indicator. But if we see yet another pullback down, perhaps a bit closer to this broken resistance level, this one here, which may now act as support, we could then potentially see another interesting long opportunity in the SPY. But for the time being, I think I'm going to just wait and see. It's been a good advisor to me over the years. Wait patiently for these pullbacks. And you may say, hey, Daniel, this is way too patient. You are missing out. Well, I will tell you then, I'm not really missing out because we are considering more than 6,000 stocks to trade. I cannot trade all of them. I can't even trade 100 of them. I can't trade 50 of them. So I will find my stocks which currently, or my ETFs, which currently have the perfect setup where everything comes together. So I'm not really missing out. I'm just using different stocks to trade. I'm finding different stocks to trade. All right. So with this, let's go to the QQQ, the NASDAQ 100 ETF. What do we see here? Very similar picture with a couple of nuances. So also here, 2 weeks ago, level 3 pullback, which was immediately bought up and prices went all the way up again, almost reached the all-time highs. And then on Wednesday, a level 2 pullback, which would not be in our range, a bit too small. Also here now, I am waiting for a bit of a deeper correction. If this happens, I will jump into it. Perhaps sell some puts, maybe some credit spreads, or engage into the symbol directly by buying the underlying symbol. So also here for the QQQ, patience is the name of the game. And I'm curious how to see how the market will open after the long weekend. So Friday was closed, today it's closed, tomorrow it's closed, Monday the markets will open again. If we see a bit of a gap down potentially, this could be an interesting long entry opportunity in the QQQs, anticipating that the overarching uptrend is going to continue. All right, moving on. The IWM, the Russell 2000 ETF. What do we see here? And now I want you to go back a little bit to what I said earlier. What did I say about Apple and the setup that Apple was in last week? Zone break retrace. What did you see here in the IWM, in the Russell 2000 ETF? Zone break, prices broke above this green line beforehand, came up. This was back in April. Came up a bit. Retracement down. Where did they stop? Exactly at the broken level. Up again, bounce again from this level. And the retracement. Where did it stop? Once again, like magic, at this former resistance level, now acting as support. Up again, another higher high, and another retracement. This time it didn't come back all the way. And now we made all-time highs last week in the Russell. So also here, my anticipation is that this trend will continue. Will I enter right now at these price levels? Probably not. Also here, I will be patiently waiting for some sort of pullback, level 3 or level 4 as per our trend radar indicator, and then consider potentially a long position in the IWM. All right, let's move on. What about oil? USO, the United States Oil Fund. All right, I think it is clear to everyone who looks at this chart here and looks at this trend channel here that prices have now, with some conviction, lost this trend channel. You can see it here. We broke below this level here quite convincingly. And to me, we wrote this in our newsletter on Monday, a couple of days ago. To me, an early sign that prices will normalize again, that oil prices will normalize again. My target, to me, this might be medium or long term, it could take a while, will be for prices to come back down to these ranges where we've been in before, between 60 and 83. I think we're going to see this eventually. Maybe not this year. This may take some time. We're quite away from these levels. But to me, that's the target I have in mind. And perhaps, there are some trading strategies that we can discuss in our lunch and learn session on Tuesday. How one could play this vision, this idea of a price move, perhaps with options or perhaps with some other ways to do it. In a risk limited manner, something that we may do in our lunch and learn session on Tuesday at 12 p.m. Eastern time. All right, so this was oil. What about gold? Gold and silver. All right, so gold is doing something it hasn't been doing in at least 3 years. You can see it here. We mentioned this also last week and the week before. It has now become a level 5 pullback. The overarching trend is still bullish. There's no question about it. Bullish since March 2023 or April 2023, something like this. But for the first time, we have now entered, if you look at the trend radar indicator down here, a prolonged period where all 4 or 5 rows are completely red. This is not a healthy pullback anymore. And of course, with this deeper correction, there's also now an increased risk that this pullback will develop in something bigger, potentially even resulting in a trend reversal. I think we'll look a bit further away from this. Our trend radar, our MA rush indicator will remain bullish for quite some time, even if prices come further down. That's just the nature of how this indicator works. But it may develop into something like this, where for a shorter period of time, we actually will enter into a bearish phase in gold. Of course, one may argue we're already in this bearish phase right now. My longer term vision, however, is still that gold will recover, will find a bottom, and then continue its move to the upside. But it's not a short-term pullback anymore. We have to be realistic. It might take some time to resolve and for gold to recover its losses. Similar story of silver. What I like about silver a bit more is that silver is still in the vicinity. This is the SLV here. Is still in the vicinity of a technical level. Yes, also here we came down. Yes, also here we were even slightly below this support level here. Yes, also here we had a level 5 pullback. But what gave me a bit of encouragement, we'll see how the market opens on Monday. I looked at the futures data on Friday. It didn't look too promising. We'll see on Monday that this is still in the vicinity of this technical level around 60. This, as long as we're still here, I think this is some merit to a bullish story, to a bullish recovery story. But if we lose this level, I think the next stop in silver also could be something around this 49 price level, maybe the 50 price level, and the deeper correction might be in play here as well. So silver and gold, they tell similar stories. If I had to choose, gun to my head, I probably would pick silver over gold right now, as it still has a few more technical levels to support a bullish case. All right, so that was silver, and they have one more, which is Bitcoin. All right, Bitcoin is at a crossroads. I'm putting my head out there. I'm claiming it. If we lose with conviction the $60,000 level, we will see a deeper correction in Bitcoin, potentially going to this level here around 45,000 or even more. I'm saying this because look what you see below this level here, below the support level on the daily time frame. There's nothing there. There's a former level back here. Where is it? All the way back here. This one here, around 49,000. This red one here. That's the only level. And below this, it's just zero. Well, sorry, 15,000 here. Not zero. But anyways, there's a lot of space below. And if we lose this level, I think we're going to see a deeper move down. That's my prediction. I don't want Bitcoin to lose this level. I told you this before. I do hold investments in Bitcoin. This is not making me happy, but we have to face reality. And I personally will be very careful and not add anything to my holding right now, because this level is being tested right now. If we lose it, there might be a bigger move down. Because if you hold it, if you can recover back to the $82,000 level here, maybe even break it, it's a different story. But we need to see this level to be held. All right. Nils is asking, could you check BTC daily with the new trendline indicator? Niels, let's do this. That's a great question. Niklas Ahoma, can you please take a note of this? Let's do this in our lunch and learn session. All right. I think we're going to have a bit more time there explaining this indicator, because today we're going to focus on the scanning part of things. All right. Perfect. So that was my market review, but of course, we're not here to discuss what happened in the market last week. We are here to look for brand new setups. And just to give you a bit of context, what is the typical setup I'm looking for? Well, it goes like this. First of all, we're trying to look for longs, for buying something. I don't want to short something. This is not the name of the game for this session. The dashboard can find some interesting short setups, but today, to keep it simple, to keep it intuitive, we will be focusing on long setups. And for this, for finding long setups, it is always better if you focus on stocks and ETFs and whatever the underlying is that is already that are already in a prolonged and stable uptrend. The longer the better, the more smooth it is, the better it is. The trend is your friend, is what traders say. Some say it's, it's just something people say. I think there's merit in it. I believe that the odds of seeing the trend to continue are simply greater than the odds of the trend to reverse. We want to bank on this. We want to take advantage of this. Now, however, having this said, we don't want to jump in blindly into a trend trade. There are good moments to enter into a trend trade, and there are not so good moments. Of course, hindsight is 2020, but let's face it, when prices are extended, when prices are really far away from the averages, from these green lines, you can see these lines here, prices up here are far away from those ones. These are not the best moments to enter into a trend trade. Because to me, in my view, there is an increased chance that we're going to see a pullback, a correction. And in our approach, we will wait for this correction before we enter into a trend. It's not the perfect approach. There will be some counterexamples, some cases where we should just enter at the top because prices are so bullish, prices that they're just going to continue and we will not see this correction. Just to be completely transparent. And one such example, I'm going to come back to my slides here in a second. One such example is SanDisk. Let's check it out real quick, just to give you some context. So, SanDisk, where do we have it? There, SNDK. Look at this. If I wait here for a level 3 pullback or a deeper pullback, I would wait forever. For stocks like this, but of course, these are the exceptions. But for stocks like these, you just have to jump in. If you believe you have like a rocket stock like this on your hands, by all means, jump into it. Don't wait for the pullback. You will lose out on opportunity. But this is not what we'll be doing today. These are the exceptions. We will be focusing on stocks which actually saw some sort of meaningful pullback. And of course, even a stock like SanDisk, if you are patient, you might find it. Now look at this one here. We had a level 4 pullback here in March, 3 months ago. Prices were much lower. Now they're, oh boy, like 4 or 5 times the size. This is a crazy chart, by the way. It's really parabolic how this one goes up. I'm not sure if anybody holds some holdings. I think Aubrey, you do. I met Aubrey in Cyprus last week. It was very nice. We had a nice chat about what we can add to the dashboard, how he trades, and that was really, it was really good feedback. But of course, what a chart this is. But these are the exceptions. You will not find a stock like this every single time. Yeah. So what we're going to try to do today is we want to find something which is more frequent and which has, which is something that, it might not be the rocket, but still some setups which have a good potential to result in a positive trade. This is what we're trying to do today. And for this, we will be looking for the stock to first come down a bit. Ideally, we're going to see a level 3 or level 4 pullback on our trend radar indicator. I mentioned it before. In our book, and in my view, these are pullbacks at the sweet spot. Not too big, when we see a complete trend reversal or risk a trend reversal, and not too small, where they're not too meaningful. Level 3 or level 4. And ideally, this is really the cherry on top of the cake. Ideally, this pullback will coincide with a key technical level on your chart. Either a support level, you can see it here where prices are coming down from the top down to a support level while being in the bullish trend. We corrected down here to this red area here, or we're correcting down to a former resistance level. Zone break retrace. We saw it at Apple, we saw it at the Russell, and today we're going to find some stocks which have exactly this setup as well. But prices broke beforehand above the resistance level, move up initially, and then correct down back to this former resistance level, which is at that point acting as support, oftentimes a nice launch pad for prices to stop moving further down and instead reversing back to the upside in the direction of the overarching trend. This is exactly what we will be looking for today. Now, how do we do with this? For this, we're going to go over to our dashboard. I'm going to show you now how easy it is to find stocks with exactly this kind of setup. And the first set of criteria that we will enter are the following. So we're going to use our scanner here on the left-hand side. And remember, what was our first criteria? You may know this. We want the stock to be in a prolonged uptrend to begin with. How do we do this? Well, we have an indicator called MA Rush. Let me show you this indicator here for everyone who is new. This indicator, that's the only one on the chart right now, shows us by means of labels, green labels and red labels here, whether we are currently bearish or bullish. If the last label on the chart is a green one and it says bull, it means that the current trend is currently bullish. Like in this case here, the example of Alcoa. You can see it here, Alcoa has been moving up since this bullish label quite some time, quite a bit, from 32 or 31 up to even 82 at times. Perfect. So this is what we're looking for. Now, that's criteria number one. How can we scan for those? Because if you look here at our scanner, here you can see, if you go to our MA Rush column here, there are some symbols of a downwards facing arrow and some of a green one facing upwards. How can we focus only on the ones which are actually in an uptrend, which have an upwards facing arrow? Well, we're going to filter for them. We're going to use our filter to the right of MA Rush here. We click on it and we select, in this case, let's say bull signal for more than 500 days. Remember, I'm interested in stocks which are in a long-term stable uptrend. And perhaps, everybody has a different tolerance. Aubrey told me that for him, it's not so important that a stock has been in an uptrend forever. This is one of the insights he gave me for his approach when we met in Cyprus. But to me, I like symbols which have been in an uptrend for quite some time. So bullish for at least 500 trading days. That's about 2 years. This is trading days, not weekdays. And now once I do this, you can see, okay, of our 6,100 stocks that we're currently scanning through, 1,019 are in a bullish trend for more than 500 trading days. If you look at this column here, every single item here has an upwards facing arrow with a number to the right of it greater than 500. And of course, this number here is the trend duration. All right, so that's step number one. Step number two is we don't want to jump in blindly into a trend trade. Let me give you an example. AbbVie. Actually, not AbbVie. Let me pick a different one so it's a bit clearer. Actually, trying to find this one here. Okay, perfect. I want to find an extreme example. So would I enter, according to my philosophy, long at this moment in ECA, in Rosa Inc., at these price levels, in the ozone layer? In my book, no. To me, prices are too expensive right now. I want to wait for a pullback first. I want to wait for prices to come down a bit first. Again, SanDisk is the counterexample to this approach. But our approach today, we will be waiting for a pullback. Luckily, we can scan for such pullbacks using our scanner here. You see this column here to the right of MA Rush? It's called pullback. What we can enter there is that, hey, we want to see a pullback of, let's say, level 3 or level 4. And once I do this, every single stock will show this pullback. Just to contrast this, look what Trend Radar, this is what this pullback is based on. Look what Trend Radar does here for this stock here, Arosa Inc., the counterexample. It's all green. This is not a pullback. But once I go to any of these stocks in here, like AEG, you will see they all came down. And Trend Radar, in this case here, shows 3 levels down, 1, 2, 3, a level 3 pullback. You can see this number here in this column. Or AEP, American Electric Power Company, 4 levels down. This is where I pay attention. This is where I am looking for my entries when we see these pullbacks. And then the third criteria, if you remember, is that ideally, I want this pullback to coincide with a technical level on the chart. So if I add our our liquidity IQ indicator here, we can see, okay, AEP, American Electric Power Company, is almost there. It's very close to it. Maybe not completely there, but this could be an interesting one. Bullish of 516 trading days. Now currently, actually, let me check this out. It's not something I had in mind, but this looks interesting for a potential long. Coming off this support level here. In fact, I like this one. I'm going to add it to our short list for the week. Okay, so for this quick detour, as you know, we create in every scanning session a little watch list with the most interesting setup that I found. You may find different ones, but these are the ones I found in our scanning session. So I'm going to go here to our little drop down and create a new watch list. There we go. So click create. I typically call this, or I always call this, the weekly swing trades column. And then the date 2026-06-20, today's date. I create them. And once I create this watch list, and there's no limit as to how many watches you want to create in your dashboard. I probably have, I don't know, 200 in here. You can see them all here. I will now add this symbol to our watch list. I like this one. Go down. I'm going to add it to our watch list. There's one more thing I will do. You don't have to do this. I will now share this watch list with you. So I'm going to go down here. I'm going to click this share button, share it, and I will unshare the watch list from May 16 because as per our convention, we had a little survey about this. I will share the last 5 watch lists, so not to clutter your account too much. All right. So that's AP. I like it. Interesting setup. Okay, but we're not done yet. I said ideally this pullback should coincide very closely with a key technical level on your chart. Here you can see it's not that close. Now, of course, here for AP, I would probably wait ideally maybe for a bit of a better entry, but I still like this setup. It's interesting. Now, how can we find stocks which are really close to a technical level? This is where our liquidity IQ indicator comes in. This one here, which draws these levels onto the chart. And this indicator also comes with a scan column. This one here, liquidity IQ setup. If you click on the filter symbol to the right of it, you will see there is a value here called long bounce. You can click on it, and once I do, you will see, and there's not that many, you can see only 6 months right now. You can see, okay, all the stocks which are in a long-term uptrend, at least 500 trading days, have seen a level 3 or level 4 pullback and are currently trading near a key support level. An example is this one here, XPO Inc. Look at this one here. Uptrend, no question about this. Pullback, level 4 as per trend radar, nearby a key support level. I like it. I will add the stock to our watch list. Interesting one. This one checks all our boxes. All right. Done. So that's one example. We're coming down to a support level. But what about the other one? What about this case here? But we want to come down to a former resistance level, zone break retrace. How can we find these ones? Well, there's also a setting for this in our dashboard. You will open once again the filter to the right of this column, Liquidity IQ Setup. You click on it and select long break retrace. Oh, there's none here. Okay, by chance, I didn't add anything to it. Later on, we will see a few of these. But for these criteria, we didn't find any additional ones with this setting. Nonetheless, let's go through a couple of examples here. And ideally, what I like to do is I like to sort by trend duration as well. Starting my iteration through these ones from the stocks which have been an uptrend for the longest, like XPO. Next one is this one here, GTT.PA, Gas Transport and Technigas SA. What is .PA? What's that exchange? One quick, okay, if you ever wonder, hey, what is this stock? What is this symbol? What you can do, actually, there's a few things you can do. You can, first of all, click on this little info icon here. You can see, okay, this one is a gas company in South Korea, or in Asia at least, and headquartered. Okay, they're mainly working out of in the Asian market, but headquartered in France and Paris. And of course, now PA makes a lot more sense. That's the Paris Stock Exchange. So I know this because I've seen stocks like this before. But if you don't know, what you can do is you can enable the exchange column. It's hidden by default, but you can enable it to the scanner here. And you can see, okay, this exchange here is in Paris. This stock, this company is traded at the Paris Stock Exchange. That's an interesting setup. Look at this one here. Long-term uptrend, correction down to this key support level, and one may think, okay, we might see another bounce off this level towards higher price levels. Interesting one. I will add it as well to our list. Done. All right. Next one, EWU. iShares MSCI United Kingdom. It's an ETF. It will not move as much, but look at the setup here. Long-term uptrend. Now in a corrective phase. Currently testing support right here. A little gap even to be filled. Once again, potentially an interesting stock, betting on the fact, okay, we may see a nice bounce off this level towards higher price levels. Oh, so also interesting. I'm going to add it as well. So you can see how easy it can be to find these interesting trade setups. But this is one example of what you can do. But the dashboard is very flexible. And I'm saying this because, with these criteria, which we have chosen right now, we only had 6 hits. You can see it here, just 6. Let me just move this away. Six hits. That's not very much. And sometimes there's even fewer, depending on market conditions, and sometimes there are more. But 6 is not a great number. Maybe by chance, you don't like any of those once you check out the charts. There's a chance for this. So you can play around with your criteria. And one way to do it is the following. So what I like to do, for some stocks, I simply like to take away this pullback criteria, requiring a stock to be to have the pullback right in the sweet spot. 3 levels down or 4 levels down might sometimes be too strict. So what you can do is you can take this away. You'll see once I do this, now we have 52 stocks, but I then like to replace this criteria. It's up to you. I mean, now we have 52, lots more flexibility, but I like to replace it with another criteria, which is this one here, a liquidity capture event at the last bar. I will explain this in a second. First, I'm going to enable this filter. So I'm going to go to this column here, LIQ capture. It's not the same as LIQ setup. It's this one here. If you don't see this one, it needs to be enabled via the columns here. Okay? You go to the filter and tell it, hey, I want to see a liquidity capture at a support level at the last bar. Enter these 2 ones. And now we have 19 criteria. I will explain now what this one will do. So let's start with Orly here. This is interesting. What do we see here? All right. So Orly Automotive, or O'Reilly Automotive, has been in a prolonged uptrend for quite some time. For, let's say, 5, 6, 7 years. A long time. Trust me on this one. So Mirage is bullish for many, many years on this symbol. But recently, it entered into this kind of descending triangle formation, which by itself is not the best setup for a long, because it's a bearish setup. It's a descending triangle. If we lose it here to the downside, there might be another big move downwards. This is why I'm probably not going to use this in our trades today, but I want to explain a case. What do we see here? I'm going to actually quickly hide. Let me just hide this drawing here. 1 second. Just to make a case. Hide drawings. You see this one here? This option here? So if you ever want to just get rid of all your annotations or drawings, but you don't want to delete them, you just want to hide them, what you can do, and this now also works in full screen mode, something that we also added recently, you can go to this little eye symbol here, click on the little arrow to the right of it, which will show you all the options, and then you can say hide drawings. You can also hide just the indicators on it, or hide everything. If you do hide all, everything is gone. Well, almost everything. Oh, that's interesting. That's Nicholas, if you're there, can you it's funny. I wonder why these why these labels are still there. It's a small glitch, but please take a note of this. So this is what you can do. In this case, I just want to hide my drawings and still see the indicators. Okay. So what do we see here at the last candle to explain this liquidity capture event a bit more? So first of all, we are in an uptrend. Trust me, we are. It's just now a corrective phase. Prices are currently testing a key support level. We came down all the way here to the 86 level. And on the last candle, you see this little shaded line here. It's a bit hard to see, but it's there. It's this one here. And more importantly, it's this label here, liquidity capture. This is an event that in our book will increase. There's no guarantees in trading, of course, but in our book will increase the odds of seeing a bounce off this level rather than a break of the level. We've seen this before. Because let's just look in the past. So up here, prices came up to resistance, liquidity capture. See it here? Bounce. Down here to support. There's a liquidity capture here, and here. We eventually bounce to higher price levels. Now, once again, we're testing support. We're having a liquidity capture event, and we may see another bounce to higher price levels. So this is what I want to scan for. I will not choose O'Reilly Automotive because I don't like this descending triangle. I think we tested this lower level now a bit too many times. We may see a break of it. So I don't want to get caught in this. But this is the idea. So let's see what other symbols we have. So back to the scanner. PRDO, Perdecchio Education Corporation. Let's check it out. I like it. Look at this. Uptrend, big swings in the stock. Wow, look at this. Big swing stocks, but prices came down all the way from the all-time highs. Notice the liquidity capture also here at the highs and bounced down. Then we came all the way down to the support level here. Liquidity capture, you can barely see it, but it's there. Bounced up. Now down again, liquidity capture, and we may see another bounce off this level. Definitely an interesting stock for the next week. So I'm going to add this one to our list. And there are 19 hits this way. You can go through all of these to see which ones you like the best. Let me just quickly go to my notes to see which ones I handpicked for you, just so I don't miss out. So XPO we had, EWU we had too. PID. Where is PID? This one here. Invesco International Dividend Achievers ETF. No idea what this thing does and how it operates, but look at the setup. Long-term uptrend, even a level 4 pullback here. Oh, this is a beautiful one. Look at this stock. Very, very small moves. This is an ETF with dividends, so it's very calm and steady. But maybe, if you want to tip your toe in the water, perhaps not the worst idea. It's a very steady uptrend. Even during the Middle East crisis, let's see how far this one went down. I think it's very little. If I measure this from down to here, just 8%. Yeah, that's very little. So it's a very smooth riding ETF. Currently testing, also here, a key support level 4 pullback with a liquidity capture at the last bar. Interesting symbol. I like it. I will add it to our watch list. All right, and add one more I wanted to show you, which is SATS. Where do we have it? This one here. You can check the other ones too. I invite you to go through it yourself, but this one is also kind of interesting. The EchoStar Corporation, even though, I like the technical setup, I don't like the business model of this company. That's a company in providing TV services. And I don't know about you, the last time, actually, today is a bad example to talk about this, but typically, I don't watch TV. I stream my stuff. I use Netflix, Amazon Prime, or whatever it might be. The only exception to this is really when there are big sport events where you want to have live TV, like the World Cup right now, of course. That's something you may want to watch on TV. In any case, that's a company in TV services, whatever they do there. Long-term uptrend, all-time highs back here in May, retracement down to this key support level with a liquidity capture event at the last bar. Also an interesting one. All right. Okay. So 2 more things before we get to your request. Number 1, there is another scan I like to use, which is also interesting. And this is another variation of the option that you can use. Sometimes I just want to take away the condition of requiring a pullback down to a technical level. For some symbols, like SanDisk, you will never see this kind of thing because the next technical level is miles away. It hasn't been established yet, near to price. How can we scan for this? Okay, let's do it one more time. Another variation of what you can do. So I'm going to delete all my filters. And by the way, guys, if you haven't noticed it yet, for the ones who joined us today, perhaps for the first time in a while, if you accidentally deleted your filters like what I did right now, we now have an option to undo the filter deletion, to revert your filter criteria. You can see now this little green button here with a filter symbol on it and this little arrow going, downwards in a circle. You can click on it. Once I do, my old filters are now reestablished. Just another little shortcut to help you using the dashboard more efficiently. But in this case, I want to change my criteria altogether. So another variation. In this case, I want my stocks to be in a super long uptrend, at least 1,000 trading days. So I'm going to go to AmiRush here and select bullish for at least 1,000. This already eliminates pretty much all the stocks in there. We only have 128 stocks remaining. All the other stocks, there was a trend change before that or after that. That's criteria number 1. And criteria number 2 is I simply look for pullbacks. Level 3 or level 4. That's all I want. This gives me 22 stocks. And if I sort by trend duration from top to bottom, I see the following. Just a couple of examples here. US dollar Indian rupee. We're not trading FX here, but if you were, that's an interesting one. Look at this. Huge uptrend forever. Level 4 pullback. Well, if you are an FX trader, maybe today or tomorrow, whenever the market opens, not the worst idea to potentially establish a long position, longer term long position. PWR, Quanta Services. Also here, you can see it here. Long-term uptrend for 1,510 trading days. Level 3 pullback as per our trend radar indicator. I'm not going to take it right now because we are too close to this resistance level. There's not too much room for this. But nonetheless, an interesting stock. If you go further down, look at this one here. Steel Dynamics. Nice. Pullback down here. Level 3 pullback. I think this one here may come down a little bit closer. Maybe towards the first MA rush line. Let's see this little green line here. I think we might get there. If we do, this could be an interesting entry opportunity. So I'm going to add this one to our watch list. There we go. And the other one that I found for you here is this one here. So I'm going to skip a few of them. I invite you to check them out yourself. BKR, Baker Hughes Company. We trade this many times. Multiple trade ideas here. You can see in our trade notes. It's an old friend of ours, this company. Long-term uptrend, level 4 pullback, and even here we're coinciding pretty much with the support level. I like it. Interesting one. I found this with these new scan criteria. So I'm going to add it as well. And one last one, Targa. If you follow us for a while, you know we have traded Targa at least 3 or 4 times in the past. Great stock. It's a midstream stock. Long-term uptrend. Every time we see a pullback, you can see it here, level 3 pullback as per trend radar, coming close to this former resistance level, this one here. See this little green line here? We're coming close to this one. If we're coming back to our entry area, maybe another chance to go long Targa in anticipation, hey, of another bounce to the upside. Because this one I would close out pretty early. Once we get close to this resistance level up here, that was a bit squeezed together, I probably would get out of it. So if you're getting in down here at 250, maybe at 2, let's say 270, 275, I probably would close out this trade from a swing trading point of view. I'm going to add this one as well to our list. So I hope this gave you an idea of what you can do with the dashboard. And there are so many more options out there. You can scan for option prices. You can scan for stocks which currently have expensive options using our heat index. You can scan for stocks which have dividends coming up if you're a dividend collector. You can scan for stocks which have earnings coming up if you want to do like an earnings play, and so forth and so forth. All right. So these are our setups which I picked for the next week. 9 different setups. I think it's a good mix. Let's see what the next week will bring. But now, of course, it's time to look at your setups. What symbols do you guys have in mind, or do you have any questions?
We have RDW. Did we look at that, Daniel?
Say it again. Which one is it?
RDW.
RDW. No, I don't think so.
Okay.
Let's check it out. But in fact, actually, I forgot one thing. Sorry, guys. Before we do this, hold this thought. Real quick, a reminder. If you like what you saw here, and if you like the power of this dashboard, why don't you join us for a 1-week trial at tradingindicators.com/view? You have to put your information there, also your payment information, but I promise you, you will not be charged in that first week, and you can cancel at any time in that week. You'll get a link. You can do it all on your own. It's very easy. It takes a couple of seconds. So tradingindicators.com/view for this. And the other thing I wanted to say, if you want to take advantage of our summer sale, it's still going on for a few more hours. We just reopened it. I asked Homa this morning whether it's still open. She said, well, I didn't hear back from her, so I just claim it. It is still open. Go to tradingindicators.com/flash 2026 to take advantage of our summer sale, including subscriptions to our dashboard. If you already have an existing subscription, no problem. What you can do is the following. Sign up for a second subscription. I know it sounds terrible, but trust me, sign up for a second one using the discount code to lock in your 40% discount. Then you email me quickly, hey, Daniel, I took advantage of this discount. I will then manually merge your two subscriptions together. And of course, I will also add the remaining days on your old subscription onto the new one so you don't lose out. Okay. So there's a bit of manual work involved, but of course, we'll do it happily for everyone who wants to take advantage of this special promotion. Alrighty, so now we can go to our symbol requests. Niklas, what were these requests? I forgot the symbol already. RDW. Okay, let's do it. RDW. All right. Redwire Corporation, bullish for 27 trading days. So it recently came from bearish to bullish. Currently level 4 pullback near this resistance level. The only thing I don't like about this one here is, well, first of all, the trend was just established. Huge move up, but also a huge move down. It's very volatile. So here we are looking at almost a 50% or 45% correction. It's a bit too volatile for my taste. So I personally would not go long here. Also, we kind of lost this technical level here already. So next step might be all the way down here. So I'll be careful with this one. That's my view.
Thank you. And the next one is APLD.
APLD, Applied, what are they called? Applied Digital Corporation. All right. Bullish for 263 trading days. We broke above this resistance cluster a few times in the past. Actually, we oscillated above and below a few times. Now trading once again up here. Yeah, it's a volatile stock. Yeah, big swings in there, but the trend for sure is bullish. To me, what you can do here is what I would do. I probably would wait. Oh yeah, look at this gap here as well. Just a second. Oops. Look at this. Actually, let me go to full screen mode just to make it clearer. So there was quite a bit of a gap here. You see this one? Where is my, there we go. Okay, this up gap here. So up gaps are bearish setups. Why? Because gaps tend to get filled over time. So we had a similar example here. Look at this up gap here. What happened afterwards? Prices actually filled the gap and then they move further up. I would wait personally for this gap to get filled, for prices to come down potentially to this level here, and then look for a long entry. That's my take on this one.
Thank you. And the next one is AMAT.
AMAT, yes. All right. Applied mathematics. Yeah, that's wow. Yeah, so the question is like similar to Sanders, should you enter right now with prices this extended? I personally will not do it. That's my trading style. I was completely wrong many times with stocks which just keep on going with no stop. But the way I trade, I will wait patiently for something like this. Level 3 or level 4 pullback. I will not enter up here. It's just too expensive. I could be completely wrong in this stock and maybe in a month or two it's at $1,000. Possibly, and I will miss out. But I will just wait. It just goes against my trading style. But of course, there's different ways to trade. So if you believe, hey, I see this thing just skyrocketing for another year or so, by all means, jump in right now. The trend clearly is extremely bullish here, but also it's quite extended. Look how far we are away from our averages here.
The next symbol is RR.
RR. All right. Rich Tech Robotics. Bearish for 63 trading days, currently testing support. Long bounce, you can see it here. Oh boy. Yeah. I mean, it's also not my cup of tea. It's very volatile. You can see, well, I guess we IPO'd here. Came all the way up to 12. Now we're kind of hanging around here. We are bearish, we're testing support. So I don't like things that are confluent. So we're bearish, but we look potentially looking for a long setup. it doesn't go hand in hand. So I would be careful. But of course, the good thing about this one right now is that we are at support, and yeah, we may see a bit of a bounce towards higher price levels. And of course, these are big moves. Yeah, if you get in here and just go to the former swing high here, that's 59%. These are huge moves. Of course, with these big swings, they can happen on both sides, up and down. So maybe just something of extremely high risk capital you want to try.
Thank you. The next one is GH.
GA
GH.
or GH? Yeah. Okay. GH. Just G. Okay, not J. This one. GH.
Yeah, that one.
GH. All right. We can this one here. All right. Guardant Health Inc. Okay, what do we see here? Bullish for 395 trading days. We broke above resistance. Yeah. Back here in May, end of May. Now kind of hang in there. Yeah, this looks like this could be a potential zone break retrace setup in progress. If you come down maybe to this level here, a 120, 121 entry point, this could be an interesting idea to bet on the fact, hey, or bet on the idea that prices will propel higher from this level, from this former resistance level now acting as support.
Thank you. The next one is Frog.
Frog.
ROG.
All right. Bullish for 340 trading days. JFrog Limited. What are these guys doing? Heard about this company before. It's a funny name for sure. What is JFrog? Supply chain. Okay. I guess it comes from like Leapfrog or something. Who knows? Okay. What do we see here? Prices also broke here above resistance. Yeah, kind of similar picture, huh? We broke above resistance. I personally would wait for a retracement if we see it down to this level and then potentially look for a long. Entering out here, I think there's still a chance that we might go down to this level around 70. This could, to me at least, would be a more interesting entry area.
Can you please look at CENX?
CEN,
Yeah.
CENX, this one. Century Aluminum Company. Okay, bullish for, where do we see it? 594 trading days. Okay. All right. Yeah, nice bullish trend here. This is an interesting one. Okay, so I want to point something out. This is an observation. I don't have any empirical evidence on it yet. Perhaps something we can do. If you see two levels close to each other, like this one here at 53 and this one here down at 46, I guess they're not that close, but they're closest together. Oftentimes, it's the lower level, this one here, which is the more important one, around 46. So here, I could imagine prices maybe coming down all the way to like 48. If they do, this could be an interesting long entry into this very stable uptrend. I like it. But maybe wait a bit longer for prices to come down a bit further.
Thank you. The next one is NVTS.
NVTS. All right. Navitas Semiconductor Corp. Okay. Another semiconductor stock. Bullish for quite some time, since May 2025. Yeah, could become a zone break retrace setup. Yeah, kind of like it. If we perhaps come down maybe a bit closer to the 20 area here, potential long entry. Yep, looks good.
Okay, the next one is TFSL.
TFSL.
Aubrey says it has short interest, 3% to float, days to cover, nearly 10 days.
Okay, yeah, TFS Financial. Okay, yeah, only a level 1 pullback on trend radar, which is not not the most not the sweet spot, at least I'm looking for. But maybe once again, this might be a stock where we will not see a deeper pullback. If you look at here, since March this year, all we saw level 1 or level 2 pullbacks, nothing deeper. Yeah, it's interesting. I personally would probably wait for a bit of a deeper correction if we see it and then potentially enter into a long position. But yeah, it definitely looks good.
The next symbol is RKT. And to answer that anonymous question, yes, you can enable alerts inside of the dashboard for your own watch lists as well. But Daniel also creates a watch list every week, which everyone gets access to.
That's right. Yeah. So if you sign up for the dashboard, you will see the watch list, which I just created also in your dashboard as what we call a shared watch list. But here for rocket companies, yeah, maybe somebody used this one as a proxy for SpaceX. But it's not the same thing as a bearish trend here, currently testing the support level. I personally would not enter this one. It's too volatile. The trend has changed. This support level here was broken before. You can see it here. We came below here. So not the cleanest setup. I would personally stay away from it. Oops. All
Okay, the next
right.
one is NEOV.
NEOV. Oh, like this? NEOV? Check it out here.
Yeah.
NEOV. Oh, we had this one before. Is that the car company? Maybe I'm mistaken. Yeah, bearish here. Oh, look at this. Currently testing resistance here. I certainly will not go long at this point. Right at resistance in a bearish trend. If I'm not sure if this stock is optionable, you want to buy some puts here, maybe they're cheap. Betting on the fact that we're going to see a bounce at this level towards lower price levels, yeah, that could have some merit. But it to me looks like a kind of zone break retrace setup for the bearish case. So I personally would not. Forward resistance here. So now I would, if anything, look at shorts.
And can we please revisit Google and Walmart from last week from Oliver?
Yeah, yeah. Google went. Google also was actually. Let me go back to the dashboard. Google also had an interesting setup last week. It was part of our watch list. Zone break retrace for Google. Yeah, we can see it here. We broke off resistance back here in April. Big gap up. This gap was closed. This is why I like this stock a lot. So we closed this gap here subsequently with one of these bars. Came down here. This gap was closed. And this is when we said, hey, potentially this could be now an interesting long. We bounced off nicely. I think this one has still more ways, more room to go. My personal target here would be, if you're trading this outright, potentially maybe 395, 394 swing trade. But of course, Google is also something that you can just, keep in your portfolio. And then, look at your portfolio 10 years later. The chances are really high that this price will be much, much higher then. All
The
right.
next one is SPCX.
Yeah, actually, let me just quickly look at Walmart. I forgot about
Oh,
this.
yeah.
And then on SpaceX, yeah, there's not much to say, Devendra, about SpaceX. We There's just not much data available, but I can look at it at TradingView. But from a technical trading point of view, or technical analysis point of view, there's nothing we can read in that chart. Okay, so here, Walmart level 4 pullback. Currently trading this support level here. I like it for long. I still believe that's a stock which has been an uptrend for many, many years. Currently corrected a little bit. Um, we saw a bit of a jump upwards last week, then we came down again, but I still like it for a long trade. So if you're in this trade, I would keep it open. And perhaps put my stop here at about 102, maybe 100.
Perfect.
All right,
And
let's go quickly
did
look
we
at
check out
SpaceX.
Oracle?
Not yet. SpaceX. All right, SpaceX. Yeah, I see this one. It's nothing we can do from a technical point of view. So now it would come down to fundamentals. It's not something I want to engage in too much. But Devendra, if you looked at our lunch and learn session, not the one last week, because last week we skipped it because I was traveling, but the one from the week before that, we actually discussed. We had a discussion topic on IPOs and what oftentimes happens to IPOs a couple of months afterwards. And the vast majority of IPOs, they saw some sort of drawdown below the IPO price. So from an investment point of view, again, who knows what will happen with SpaceX? It's a big question mark, but I personally will wait for this drawdown to happen and then potentially look to add this into a longer term trading portfolio or investment portfolio. All right. Oracle was the next one, I believe. Yeah, all the software stocks are struggling, including Oracle, came up a bit now, testing once again this former resistance level. I mean, it could be an interesting buy if you believe Oracle has longer term applications. Could be a value play now where you can get into it a bit cheaper. This could be the area. Who knows if you're going to get all the way down to 128 again? But nonetheless, even if you get in now, if you measure the correction from the highs down to where we are right now, that's almost 50% down. So definitely a steep discount as a value play. From a swing trading point of view, it's not a clean setup. Bearish trend. Even though we are at former resistance now acting as support, that's not the cleanest setup. All right. NHY. from Aubrey. Do we have this one in here? NHY. Oh, this one here. All right. Aluminum. Oops. Bullish for 158 trading days. Level 4 pullback. All right. Oh, yeah. Definitely a nice one. Let me just see here. Yeah, that one looks interesting. Nice pullback towards the support level here with a liquidity capture here. The only thing I don't like that much about this one is that this resistance level here is not very far away. So here I probably would book profits already maybe around 108. That's just it's a small modest move, but nonetheless, yeah, it's a nice retracement here, level 4 down. We came back 15%, definitely in the sweet spot of things. And yeah, it's an interesting one. All right. Perfect. I don't think I see any other ones here. But I did see some questions. Martha was asking, do you keep all your trade notes in the dashboard or do you use a journal? No, for me, it's just the dashboard. That's where I put my trade notes. We have plans to extend these trade notes further. So I have some ideas. And one idea for sure will be to have a way to export it, either to like HTML, like a website where we can see them all together, or maybe even PDF or whatever it might be. That's something we have in mind. We did some work on it. It's not as easy as it may sound to make this look nice in the end, but that's something we want so that you can actually have like a dated journal with your journal entries by date and all the stocks you considered at that given date. Right now, what you can do, Masas, you can find all the stocks of journal entries. You can see here. I want to see the ones. Oops. Do we? Yeah, which have at least one entry. Can do this one here. You can see, okay, I have 311 stocks with entries, but it doesn't show you when we did an entry, and it's a bit hard to see. You have this preview. I don't know if you saw this one here, but if you hammer over the mouse, what the last entry was, hello world or whatever, but it's not as convenient. So what I would like to do, again, this will take a little while to achieve, have an export function or feature for the trade notes, which will list the trade notes in chronological order. So you can see, hey, what was my idea my ideas 2 weeks ago, or in the last month, or in the last year. I think that makes it a bit more easy to browse through your notes. All right. Okay. MS from Baba, and then there's a question from Linda. Okay, let's have a look. MS. Sometimes you have to if a combination like MS, like a letter combination is very common, you have to just go through it slowly. Morgan Stanley. Oh, I used to work with Morgan Stanley. Let's see what they're doing. Wow, very extended. Yeah, once again, this is not a price level where I want to get in. I would wait for some sort of retracement if we see it. Yeah, but yeah, very extended. Linda's asking, any more info on Z-score and when it might be available as a filter? Yeah, Linda, it's available in our staging site. And I actually showed it to Aubrey a couple of days ago in Cyprus. What's the current situation there? I think what we're going to do, Linda, we're just going to release it with what I think are good defaults for the averaging period. And then I'm just going to see what is the feedback from you guys with this Z-score indicator. And this is how we're going to improve. So I think we're now at a state where, hey, our internal testing has come to an end. I will release it to the live site, and then you can treat it as a beta feature, a better feature. You use it at your own discretion. Perhaps give me some feedback, and this is how we can refine it further. Where's the option professor? He's in Las Vegas. He's based out of Las Vegas. And if you're wondering if he's coming on today, he's never coming on our Saturday sessions. He's part of the Lunch and Learn sessions on Tuesdays. Yeah, perfect. All right, guys. Well, with this, I think we answered all the questions. I believe we do have some interesting picks for next week. And just a quick reminder, the summer is still open, just for a few more hours. Take advantage of it at tradingindicators.com/flash 2026. And of course, if you want to sign up for a trial for the dashboard, the link is down here. It's tradingindicators.com/view. With this, guys, I wish you all a great weekend. Take some time off. Enjoy the World Cup. This is what I will do later on today. Germany is playing against Ivory Coast. It's supposed to be a very good game in Toronto, which is not too far away from Montreal. where we are right now. And it's about 6 hours drive, so not too bad. It's going to be a good game. It's going to be a tight game. We'll see who wins. I don't think Germany has any hope of winning the World Cup, but you never know. But hopefully, or at least from my point of view, hopefully they can beat or at least not lose against Ivory Coast. With this, guys, have a great weekend. Enjoy your time off and talk to you all next Tuesday at our next Lunch and Learn session. Bye, guys. Thank you.